Hey, this is Scott Cole from bestdaytradingstocks.com and besttipsfortrading.com. Just wanted to provide a little commentary here on Friday morning, September the 2nd. We just had the August jobs report released, and it was a lousy number. It came in at 0. So the market is under some pressure before the open, and the market had already been under some pressure because of weakness in Europe as well. So here's a chart of the S&P 500. Over here is yesterday's close. Yesterday it closed back under its 34-day moving average after closing slightly above it the previous day. Yesterday the market started higher and then closed lower, but it was on very low volume, and so I kind of discounted that trading action due to the lack of volume. Actually, it was somewhat encouraging that the market declined and really did not go down too far, and the volume on the downside was light. Now, a characteristic of a bull market is on days where we get some weak economic data, the market will open lower and then close near the highs of the day. So we're obviously going to open significantly lower. I believe the S&P futures are called down about 18 points. Fair value is +2, so the S&Ps are going to close or open somewhere down about 20. And that could certainly change over the next half hour before the open as I'm recording this. But if this is indeed a new bull market, this market should shrug this news off and close well off its lows of the day. And if we see that, then we can be more convinced that we are indeed in at least a new intermediate bull run. I became cautiously bullish a few days ago once the S&Ps were able to close at above 1210, and we did that for 3 days in a row. But as we progressed up, the trading ranges got a little bit more narrow, and it seemed that the market had difficulty pushing up. The volume on Wednesday was actually a bit higher, the trading range was narrower, and the market had trouble moving much higher. So that suggested it was running out of gas, actually. And so we're due for a little short pullback, but if we're going to get a big pullback, then that would suggest we're going to head back down to retest the lows. My 13-day exponential moving average is at about 1189. So if we close under that level, and it looks like we're going to open under that level, if we close under that level, that's going to be suggestive that we're going to head back down to test the recent lows. And if we're off by over 2% on all of the market averages today, that would suggest a true selling day, and we're going to probably have to retest those lows, and the recent run up from the first retest is probably going to be negated. So pay very attention to what happens today. It's a big news item. We'll see if this market is strong enough to shake it off, if it assumes that Bernanke's going to come in, or if there's going to be some big announcement on the jobs report next week. Remember, we're heading into a long weekend. Volume might be pretty slow today, so that could exacerbate moves on the downside. All the traders will be coming back next week, and then Obama gives us his jobs report. So next week's going to be, even after today, is going to be a very key week for the market to determine whether we're going to try and push higher, or if we've done all we can to the upside for now, and we're going to at least retest the lows. So that's it for today, and we'll get back to you over the weekend.